Hello, good morning everyone. Hope you all had a good night rest. And as they say, thank God it's Friday. So today is the last day of the 2-week session. It's been a tough 2 weeks with the Euro-US dollar going up and down and the volatility, but we've kept in the game in terms of sticking to the plan and especially money management. In fact, this 2 weeks has shown the importance of good money management and only risking what's appropriate to your account size. Because despite the horrible week, horrible 2 weeks, we've still been able to trade for 2 weeks instead of just lasting 1 day in the market. So today we'll go through, or this morning we'll go through the market, see what our options are in terms of placing trades, and then we'll go through the options screen. There will be no webinar at 12. Anyway, I'll tell you why. Let's go through the economic calendar first. So today is Friday, the 8th of July. So we're looking for reports of high importance that will be affecting the market we're concerned with, which is the Euro-US dollar. And the big one is this US unemployment rate, the change in non-farm payrolls. That comes out at 1:30. That's a report of huge importance. It comes out the first Friday of every month. And this report moves all markets, commodities, Forex, stock market, whatever market it is, this report tends to affect it. So that's a huge report due out at 1:30. And as we know, there's a high probability the market will trend sideways prior to the report coming out. So as you've already witnessed over the last 2 weeks, that there is a good chance the market tends to trend sideways prior to reports of high importance coming out. So as always, you can decide whether you just keep out of the market till after the report comes out, or what I do in my own trading plan is to place one trade prior to the report of high importance coming out. You always have to remember you have 3 attempts at the market, or 3 attempts to have a profitable trade every day in the market, and it's just you deciding how you use those 3 attempts. Although when we say 3 attempts, as usual, what that means is that if your first attempt is successful and you're profitable with your first attempt, then you stop trading. If you're not successful, then you go to the second attempt. If your second attempt is successful, then you stop trading. If your second attempt is not successful, then you go to your third attempt. And if your third attempt is successful, you stop. If it's unsuccessful, you stop. So that's what I mean by you have 3 attempts at the market, and you just decide how and when you use those attempts on the market. So you have to take all the factors into consideration, and then you decide when would be a good time to place your first trade or have your first attempt at the market. So you can either do that before the report comes out or after the report comes out. It's your choice. But the fact is that you just need to realize that the market, there is a high probability that the market will trend sideways prior to the last report of high importance of the day. So the last report of high importance at 1:30. As you can see, this one is from China and it's on Saturday, so that's of no consequence to us. So the last one of importance today is at 1:30. So like I said, we will not meet at 12. We'll meet at 1:20. So after this webinar is over, I'll email you all out a webinar invitation for us to meet at 1:20. So do check your emails about 10 or 20 minutes after the webinar is over to register for the webinar at 1:20. So we'll meet 10 minutes before the report comes out, and we will not meet at 12. So with that in mind, we'll go to our charts. Let's bring the charts up. We'll start with the 1-year daily chart. And as we already know, the overall market is trending sideways. So again, no swing trading opportunities. If you remember the presentation I did on swing trading, where I say, you just have to be patient and wait. And this is just an example. So we see 2 weeks has gone by and we have had no swing trading opportunities on Euro US dollar after 2 weeks of trading. But that's the thing with swing trading, you don't get an opportunity every day. You just have to be patient and wait to get clear opportunities to trade. And obviously once you're actually in a trade, again, it might take you weeks before you get out of the trade. So swing trading takes a lot of patience and discipline. So there's no swing trading opportunities. Let's go to day trading. So as we can see, yesterday again, in line with the volatility in the Euro US dollar, it was initially trending sideways, then it fell, then it went straight back up, then it's going sideways again. So we can now see that when the market shot up yesterday, it formed a high there. It formed a high there of 14,374.4. Just round up, and then you can see the low there of 14,332. That's the low after it initially went up. Or if you take this low too, the lower there of 14,333. But either which way, we can see that the pivot point is well clear of the sideways trend. So the pivot point and the first resistance is clear of the sideways trend. Whether you take this low or even that low, the pivot point is below that. So again, like I said, you can either just keep out of the market, not place any pending orders, and just wait for the report to come out before you trade. Like I say, I place one trade before the report comes out. So I'll be placing a pending sell order just below the pivot point at 14,318 to sell in case the market falls, and a pending buy order just above the first resistance at 14,420. So as usual, if the market just keeps going sideways till 130, then that's fine. Then those orders will still be pending and they would have not been taken. But if the market falls and take the sell order, then I'll delete the buy order, and that will be the only trade I'll be placing till the report comes out. If it ends up being a losing trade, then that's fine. We just stop trading till 130. And obviously, if it becomes a successful trade again, you just stop trading, and that's it. So that's the plan. I'll just delete that. We'll see if, or we'll also see if a resistance will form there. Obviously, like I said, while we're waiting for the report to come out, we want to try and just stay clear of the market. So we'll stick to using the pivot points. Obviously, again, remember, if the market was trending close to the pivot point or trending sideways around the pivot point, we would not be using the pivot point. We would have gone for the first support. So if there was any indication that the pivot point was close to or within a sideways trend, we would not have gone for the pivot point. We would have gone for first support. So the other reason why we're going for the pivot point is because it's well clear of the sideways trend. And that's what we're going to stick to. But come 130, if by 130 the market has formed a resistance or has formed a support, we could possibly then use that when the report comes out, but not before the report comes out. Any questions on today's plan? If you have any questions, you can either click the hand button or send it through the question box. Like I said, there will be no webinar at 12. We're going to meet at 1:20, 10 minutes before the report comes out. And I will send you all out the invitation once this webinar is over. Okay, so that's the plan so far for today. We'll see if a support forms there. We'll see if a resistance forms there. But in the meantime, our pending orders will be at above R1 and below the pivot point. Okay, so if there are no questions, we'll just go to the stock screening. Again, all the sessions are being recorded, so if you need to get to work or have other things to do, you're welcome to leave. And you can watch the recording later. And obviously, if you have any questions, you can ask while I'm going through the stock screening. So we're just going to check for any stocks that we can add to the watch list. So start with New York Stock Exchange, 52-week highs. Looking for stocks that are $50 and above. And I've got that one, DDS, 59.59. These are ETFs, so they don't tend to be rated. Next one is VHI. And that's $57.32. Got GCO 56.20 and CASC 53.37. That's exchange traded fund. We don't want that one. And we've got JWN 50.56. And last one is DSW 54.59. So those are the stocks on the New York Stock Exchange making a new 52-week high and $50 and above. We'll go to NASDAQ. So we've got Price Smart, $60, PSMT. There was a time I used to actually buy these stocks that passed the screening test, but they require too much capital. I just stuck to placing stock options in them. Take the money and run. And that's it. So now we're going to check, see if the stocks are optionable. Go to Option Express, Options Chain. Start with the first one, GDS. So you can see it's optionable. Next one is VHI. That's not optionable. So that goes off the list. Next one is GCO. That's optionable. Next one is CASC. So that's not optionable. So that's off list. JWN. As you can see, that's got options listed. DSW. That's got options listed. Go to PSMT. That's got options listed, and last one ASCMA. And that has no options listed, so that goes off the list. Hello, Andy.
Oh, hi, Remy.
Hello.
What was my question again? Okay, actually the question is regarding the stock. You just mentioned something that there was a time you buy the stock instead of once they pass the screen test. And I've been thinking in that direction that is it not possible to actually screen test the stock same way you are doing, then if one can afford it, then buy it as for fee.
Yeah, you can, but as with anything to do with trading or investing, you have to have a plan.
Yeah.
So, I mean, that was a throwaway comment, which probably I shouldn't have made. Because yes, you can buy the stocks, but there are other things you need to take into consideration.
Yeah, I remember that too.
Yeah, because yeah, I think I have to be careful with throwaway comments like that. Because essentially, by and large, yes, you can go through that screen test. It helps you identify good stocks with good potential. But if you're actually thinking of buying the stock for the long term, then you need to start to think, long and hard about that. You can see when I'm doing the screening of when I'm doing the stock screening, yeah?
Yeah.
You can see I'm not really concerned about what the company does.
Okay, that's a difference, isn't it?
Yeah, because, I mean, let me go back to the market screener. I mean, let me show you, for example, here. Let's go back to New York Stock Exchange. Now, you can see some of these companies here that we're just writing down. Let me see. Let me click look up, sorry. Okay, so New York Stock Exchange. So I will show you there's some companies here that, where have they gone to? Ah, they disappeared. Can't find them again. Anyway, let me go back to the options, to the screener. Let me pick one of the companies, because there's one of them there, that DDS. Let's go to DDS. Now, Dillard's is a very, very, it's a huge departmental store in America. And I know, I mean, I don't know if any of you have been to America and shopped in America, you will know about Dillard's. Dillard's is like, it's like Harrods, or it's like Debenhams.
Yeah.
Sorry?
Yeah, Debenhams are also Fraser. So.
Exactly.
Yeah.
So I know this company well. I know Dillard's, and I know it's a very, very popular retail outlet store. So when I see a company, that's what I used to do in the past. When I see a company like this that I know well, and it fulfills all this criteria, we haven't screened it completely yet, then I would then look at the, obviously, affordability of the stock price.
Yeah,
the long,
yeah.
Yeah, then the long term, because obviously with options you're paying much less than when you actually buy the stock itself.
Yeah.
So so you have to take into consideration the company. Now let me bring up another one. Let's see, DSW. Now DSW, I don't know anything about this company. So I don't know. So this company might pass the criteria, but if I want to buy the stock of this company, I don't know anything about. I don't even know what they do. I don't know anything about them. I don't know what their long-term future is. So yes, you have to take slightly a bit more information about the company before you actually buy the stock. But for options, since I know it's short-term, in and out, I don't care what the company does. I just want to place option on it, follow it up or down, and be in and out.
Yeah. And with the cost as well, sometimes it's quite expensive to buy any of these stocks.
Exactly. So that's why I just stuck to options.
Yeah. Okay.
Okay.
I know we've discussed it in the past, just refreshing.
Yeah, I mean, I think I'll probably be doing another session on stocks in a normal Tuesday webinar when we get back to that. All right,
Okay,
let's go.
thanks.
Pleasure. So let's check on the fundamentals of the stock. Earnings per share is 75. so that's failed. It has to be 80 plus, so that's failed. Go to GCO. Earnings per share is 76, so that's failed. Go JWN. Earnings per share is 75, so that's failed. DSW. Earnings per share is 79, so that's failed. PSMT. That's the last one. Okay, that was close. Earnings per share is 95, that's good. Relative strength 98, that's very good, but industry group strength is B, so it should be minus A or above. So no stocks fulfill the criteria today for adding to our watch list. So we'll now go to our watch list and see if there are any options, any stocks we can place on any trading opportunities, any option trading opportunities. As usual, before you place an option, oops, what did I do there? As usual, before you place an option, you want to check the direction of the broad market. That would determine whether you place a call or a put. And obviously, since we're trading U.S. stocks, the broad market will be looking at the S&P 500 and or the Dow Jones or the Wall Street. So we're trying to look at the direction of one of those two markets. I mean, they both move in the same direction, so it really doesn't matter which one you look at. And if we go to our IG index, you can see that the market is extremely bullish. So you can see it's broken the moving average 50, it's gone up, pulled back, and raced up again. So you can see that the market is now on its way up. For those who do index funds, in a long-term investment, you could see you'd have been acquiring lots of units when the market was falling, and now is on the way back up. But we can now see we're now going to be placing call options on our options trading, because the broad market is now going up. It's broken the moving average 50, it's made a high, pulled back, broken that previous high, and made a new high. So now we can start looking for call option opportunities. Now, to place call options, we're looking for stocks that are uptrending. So that's the first thing we look for. The first thing we look for is to see if the stock, the 30-day moving average is uptrending. And the 30-day moving average is the blue line. So we want to see stocks that are first uptrending, but you can see this is going sideways. We want clearly uptrending stocks. If they're clearly uptrending, the next thing you look at is if they've been oversold. And if they're then oversold, then the next thing you're waiting for is for them to close above the moving average 7 within 5 working days. So I'm just going to go through this list quickly. You see that's still trending sideways. That's trending down. That's trending down. That's trending sideways. That's trending sideways. That's trending sideways. Okay, you can see now this is trending up. You can see the moving average 30 uptrending. So now that you're happy that it's uptrending, next thing is to check, is it oversold? It has gone to minus 80 or below, and it hasn't been oversold yet. So we'll just keep an eye on it. That's trending down. That's trending sideways. That's trending up, but it's not oversold. That's trending sideways. That's trending down. Okay, so that's trending up, but it's not oversold. That's trending up, but it's not oversold. That's trending up, but it's not oversold. You find that in options trading, for those who've been trading options will realize that, but for those new to options, you can find that just by the market moving from here to here, you can make thousands and thousands of dollars just by a short move in the market. And that's all you want to do with an options trader. That short move in the market can earn you a huge amount of profit. So it's just that short move you want to catch in the market. And you can, earn a lot of money doing that. But, this is not oversold. Let's go to the next one. That's trending down. That's trending sideways. That's trending sideways. That's trending sideways. It's trending down. That's trending sideways. That's trending sideways. Sideways. We only want clear uptrending stocks. It's down. That's sideways. Okay, so that's trending up, but it's not oversold. Sideways. Sideways. That's clearly trending up, but it's not oversold. It's trending up, but not oversold. That's trending up, excuse me, but it's not oversold. It's trending sideways. That's trending sideways. That's trending up, but it's not oversold. That's trending up, but it's not oversold. It's trending up, but it's not oversold. You see, options trading, again, just like swing trading or positional trading, again, it just requires a lot of patience. You just have to wait for a clear opportunity. That's going sideways. That's going sideways. That's going sideways. That's going sideways. I want stocks that are clearly uptrending using the 30-day moving average. I always say if you have to squint your eyes and look at it and to get a magnifying glass to see if it's uptrending and it's not uptrending, you can see that's clear. The moving average 30 is clearly going up, so that's uptrending, but it's not oversold. If it's not clearly uptrending, it's not uptrending. Or if it's not clearly downtrending, it's not downtrending. That's going sideways. Again, that's the beauty of having as many stocks as possible on your watch list, because you just want stocks with clear opportunities. You don't want one where you're saying maybe taking chances. No, just look for one that matches your criteria. That's uptrending, but it's not oversold. That's going down. It's going down and sideways. It's going down. It's going down. It's going sideways. 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 Down. Okay, that's going up, but it's not oversold. That was going up, but it's beginning to go sideways. It's going sideways. That's going sideways. It's going up, but not oversold. Alta. That's going up, but it's not oversold. That's the VIX. Volatility index is low, 15.5. Again, that indicates the market is bullish. That's going down. It's going sideways. It's going down. That's going down. That's a nice uptrend, but it's not oversold. It's going sideways and sideways. Okay, so there are no option trading opportunities. Obviously, today is the last day for the 2-week session, but as usual, even when the session is over, you'll be getting emails for stocks that has fulfilled the criteria or any option trading opportunities. If you don't get any emails regarding options, then it means that no stocks have either fulfilled the criteria or there are no option trading opportunities. So you only get emails regarding options if a stock has fulfilled the criteria or there are option trading opportunities. Then you all receive an email. Hello, Anita.
Morning.
Morning.
I just wanted to find out the significance of the stock being oversold, even when it's uptrending.
Yes, that's a good question. Let me touch that again. I always say when it comes to trading and learning how to trade, all questions are good questions. Because it's all these little things that make a big difference with trading, understanding them. Now, where's the, yeah, it doesn't matter, I'll use this one. Let me get, I have to do something about my, being pedantic about when it comes to trading, I get too fussy, which is not good. I want to get a stock that that looks nice. Oh, let's see. Okay, good. This looks good. Okay, here we are. Now, usually when the when the market is trending up, yep.
Mm-hmm.
Can you hear me?
Yeah. Yes, I can.
Okay. When the market is trending up, the definition of an uptrend is the market making higher highs and higher lows.
Yes.
Yeah. So the market will go up, make a high, pull back, form a low, then start going up again, break the previous high, form a new high, then pull back, make another low, which should be higher than the previous low.
Yeah.
Okay. Now, technically, wouldn't you like to know when the market has pulled back, when it's going back up, then buy?
Yeah.
You would like to know that, wouldn't you?
Yes.
Yes, and this is exactly what happens with this indicator. Because when you find the market going up, yeah, with the moving average 30 going up,
yeah.
Now, when the market pulls back, that's when the Williams percentage hour descends to minus 80 or below. That indicates a pullback in the market.
Okay.
Now, when it descends to minus 80 or below, it means the market has been oversold. That means people have sold it and it's now a bit cheap again.
Okay.
And there's as we all like things when they're cheap. We want to buy when they're cheap. Buy low, sell high. So there's an indication that when it's low, when it descended to minus 80 or below, that is low, then there's an indication people want to start to buy again because it's now been oversold.
Okay.
Yeah?
Okay,
But what's the proof that people are buying again?
Okay.
That's when yeah, go ahead.
When it's making new highs, or
no, when it now closes above the moving average 7.
That's 7, yeah.
That's the third criteria.
Okay.
So that's why it's in those step-by fashion. So that's why step 1 is to check the trend of the market first.
Okay.
That's uptrending. Then step 2 is then, if it's uptrending, you're waiting for it to pull back.
Mm-hmm.
Then that pullback is shown by the Williams percentage out descent to -80 or below.
Okay.
Now you want evidence that is now going back up again.
Okay. So you want to ride it up.
Exactly.
Okay.
That's when you then place your call, when if the market then closes above the moving average 7.
Mm-hmm.
I mean, this is an example here. Let me make it a bit bigger. Now you can see here where the market was going up. Yeah?
Yeah.
Okay. So you can see it went up. Then you can see this pullback here.
Mm-hmm.
So you can see as the market is pulling back, yeah?
Yes.
Then you can see it became oversold.
Okay. Yes.
Yeah?
Yes, sir.
Now that it becomes oversold at this point, yeah, you are now waiting for it to close above the moving average 7, like it did here, as an indication the market is now going back up. Then you buy and follow it up.
Ooh. Okay. Great.
Yeah. So that's the theory behind it. It doesn't work like that all the time as clockwork, we wish. But yes, that's the logic and theory behind it.
And when do you come out?
When you make your 100% profit.
Fantastic. Great. Thank you.
Pleasure. Let's see, is there another question here? What about swing trade opportunities? Should we be expecting email for entry and exit? Oh, yes. A question was that if there are any swing trade opportunities, will I let you guys know? Yes. Usually what I tend to do is that when there's a swing trading opportunity, I tend to put it on the blog. Let's go to the blog quickly. So yes, I'll probably email you and then get you to check the blog. Resources and links. So if you go to the blog, so yeah, usually I put it on the blog. So if there's a swing trade opportunity, I'll paste it up on the blog and give you my comments. I don't know if there's any, gosh, there's quite a lot there. Anyway, it will be on the blog, basically. So yes, if there's a swing trading opportunity, I'll just email you all and tell you to check the blog for the swing trading opportunity. Any other questions?